my India Bulls housing finance investment has fallen by roughly 50%. Hi everyone, welcome to today's video. So on today's video, I'm going to reveal some of the stocks where I'm making the most amount of losses. Okay, so this gives an opportunity to a lot of people who want to troll me that Akshat, you know nothing about stock markets, therefore you are taking a loss. So please at least hear the entire arguments and videos and leave comments. Not a problem there. I'll be happy to read those comments. Three important things that I'm going to do on this video. Number one, I'm going to talk about some of the important things that are going on at a macro viewpoint. That's one, and why you should not get super scared about investing in the stock market. Second key point, I'm going to do stock specific discussion, and I will discuss 4 of my most loss-making stocks and one additional stock where I'm not making the most loss, but this is a talked about stock, so I'm going to talk about that also. Third and finally, we will look at the way forward, that what is it that we should be doing as investors in the stock market. So let us get the discussion started. But before jumping into the core of the video, let me show you the portfolio of Mr. Vijay Kedia, who is a very celebrated investor in India, and tell you a very important point. So let us first and foremost take a look at Mr. Vijay Kedia's portfolio, and what you will see is that in December 2017, his portfolio size was roughly 500 crores. And now his portfolio size is again roughly 500 crores. He must have withdrawn a lot of money in the stock market, but it is suffice to assume that there are seasons when his entire portfolio size has gone down and there are seasons when his entire portfolio goes up. For example, in this particular quarter, his portfolio size increased a lot. Then it fell down. Then it increased a lot. The bottom line is that here we are looking at the journey of a very big investor in India. Even he would have taken massive losses in the stock market some years, and in some years he would have made massive gains. And here we are worrying about that, you know what, in one stock I lost like X amount of money, or in Y stock I lost like X amount of money. So this is a very, very important point, that even the best of investors in India undertake losses. With that viewpoint in mind, let me talk about 5 key macro factors right now in the market and why you need to be aware of these 5 key things. So point number 1 is that the entire market, both in India and in the US, have gone down. If you are seeing your portfolio in red, you should not worry too much. For example, Nifty 50 in India, that has fallen by roughly 13% as I'm making this video. In the US, S&P 500 has fallen by roughly 16% as I'm making this video. These are big fall in the indices. We are not even going stock specific here. The entire index has fallen, which is a big fall, and therefore investors are panicking. There is nothing new. Important point to notice that in case you are seeing your portfolio in red, please don't start fretting about it. Please don't panic sell. Please don't panic buy. Just stay relaxed. Your obvious question here would be that, Akshat, is your portfolio in red? So no, my portfolio is not in red. I'm still on profit because I have been investing for a while and my portfolio is very much in green. In 2020 to 2021 period, I booked a lot of profits also. So I'm sitting on a big cushion. I'm saying this in the interest of transparency. I'm not saying this to boast, right? So please don't take it otherwise. A point to be noted here is fairly simple, that everyone's journey in the stock market would be very different. If you would have started investing in 2021 after your friends told you that, you know what, there is a lot of money to be made in the stock market, you jumped in 2021, and if you're seeing your portfolio in red, even 15-20% red, it's not end of the world. Please do not panic. This is the most important message that I want to give out here. Second key point, if you take a look at this particular chart, so this LinkedIn post was done by Mr. Mohammed Al-Arian. I am personally a big fan of his work, but many a times big investors like Mr. Mohammed Al-Arian, Jeremy Grantham, they also create panic in the market. So just zooming in on this particular chart, for example, you will see that in dot-com bubble, $4.6 trillion were lost. In current decline, $7.6 trillion have been lost. Oh my God, this is going to kill the stock markets altogether and we are never going to come up. Please don't believe in all these narratives. A simple thing that was missed here was the dot-com bubble took place in 2000s, right? Early 2000s. It has been approximately 22 years. In 22 years, if you compute the basic inflation also, do you realize how much that would come out to be? So please don't go by raw statistics and start panicking. Please use a little bit of your brain. These type of stuff will be posted on social media. You don't need to get scared. The classic case in point is the story of Jeremy Grantham. He's an investor in the US. He comes on news channels all the time and he keeps on speaking that, you know what, markets are forever going to go away, this, that, all that stuff. In his latest filing, he ended up purchasing a bunch of stocks. So many people say one thing publicly and do another thing privately. So please do not get panicked. If you panic, only big investors are going to make money and you will lose your money. The reason why retail investors do not stand in the stock market for a very long period of time is that they are not able to handle the volatility. With little bit of shaking that the stock market is shaking, they will jump off the boat and they will never return to the stock market and take a permanent loss under bad circumstances. So please don't do that. So this brings me to point number 3, that right now there is a lot of talk that, you know what, inflation is high, it is getting higher by the day, and our wealth is getting destroyed. No doubt about that. I 100% agree. I myself have made videos on that topic. But a related concept that you need to know that people are not speaking about is the economic concept of price stickiness. So price stickiness in simple terms means that, hey, something that used to cost 100 rupees 5 years ago, now it is probably costing 150 rupees. Now imagine this, that 5 years from now, do you think that this 150 rupee thing, irrespective of whatever the inflation is, will the prices come down? The answer is absolutely not, that these prices are not coming back down. Right now, there are inflationary concerns. A lot of companies have increased their product prices. Do you really think that these prices are going to come down? The answer is no, these will not come down. Now, why is this economic concept important for you? Because of the fact that where do you think that this increase in prices, who will benefit from this, right? The answer is companies that have pricing power will benefit from it. In the short term, are they suffering? The answer is 100% yes, that they are suffering because their input cost has risen. But once the inflation situation goes away, the product prices are not going to come down. But yes, their input cost prices are definitely going to come up. So just to help you consolidate this example, consider, for example, something like Hindustan Unilever. Now, right now, their input costs have gone up. It has gone haywire. It will get reflected in the quarterly results over the next 1-2 quarters. Are you going to make profit as an investor? Probably no. We can't guess it for sure. But the most likely outcome is that in the next 2-3 quarters, you might not see a lot of profits from HUL. But have they increased their prices? The answer is yes. Now, are they going to bring these prices down in 1 or 2 years when the inflation situation goes down? The answer is absolutely not. But will they be able to reduce this input cost? 100% yes. So are they going to become more profitable after that? You guess, you let me know in the comment box. So the bottom line is that please do not deviate from economics. Economics catches up. Macroeconomics is the most powerful way of analyzing stocks and it works like a charm. So today we have a phrase, works like a charm. Let me know what does that mean. Now moving on to point number 4, which is a fairly important point, which has got to do with historic data. Now, if you study the history of crashes, whether it's 2000.com crash, whether it's 2008 crash, whether it's 2020 crash, whether it's 2022 crash, what do you observe? So number 1, you would observe that every time the crash has happened, the market has tanked, but it cuts its previous peak. For example, in 2020, the Nifty fell to approximately 7,400 levels from 12,500. Did it cut the 12,500 levels? The answer is yes, it cut. Same happened in 2008, that the markets fell by 60%. Once it started rising, it cut its previous peak also. So the bottom line is that there is always recovery that happens. If the recovery does not happen, then the world will stop growing. And it will not happen that the world will stop growing. There is no fundamental reason why that would happen. It might happen that it might take a little bit of time. So during this period, if you are invested in good companies, you will be okay. So please do not stress about it. Second and more important point is that every time there is a crash, a roadmap is built to deal with that crash. When in 2008, the markets crashed, Feds came up with a system called as quantitative easing and they started pumping money into the economy. They adopted the same method in 2020 again. They started pumping money into the economy. Now, yes, there are side effects to it. For right now, the major side effect that is impacting the market is that there is too much liquidity in the market. Feds are increasing the interest rate very fast and as a result, the markets are shrinking. Whenever Feds or central governments feel that, you know what, that enough of this quantitative tightening, it is slowing down the growth, they are going to get back again and start pumping more money into the economy. Then guess what is going to happen to your stocks? They are again going to become rocket. So there is no reason to fundamentally panic here. If the world has survived, so to say, post 2020 COVID, it is going to survive this crash also. So have a little bit of faith, only then you will be able to stand in the stock market. Now, fifth and final point, we always assume that stock markets go up like this and they fall like this. But that is rarely the case. That many people right now are waiting that, okay, once I get a permanent signal that recovery has happened, then I will jump into investing in the stock market. Okay, we are not the only geniuses here in the stock market. if it was that easy to predict when the bottom has been formed completely and then we will start taking positions, then why do you think that investors like Mr. Vijay Kedia or Mr. Rakesh Jhunjhunwala are still investing in the stock market? They would wait for the bottom. They are smarter than us to figure out when the bottom has been formed. There is just no way. Even when big investors are talking about that the bottom has been formed, they do not know. No one knows when the bottom has been formed and when the stock market will start running. So please do not try to time the market. Our only job as retail investor is pick a good asset, start investing if it falls more, and if our situation permits, keep on buying more. That is the simple thing that you need to do and you will get the results. Now with that viewpoint in mind, let us start having stock specific discussion. And the first stock that I want to discuss with you is Indiabulls Housing Finance. So let me first and foremost show you my holding on this portfolio so you can clearly see that I had approximately invested 1.5 lakh rupees and I am sitting at a loss of roughly 46% on this stock. So this is a fairly big fall for me because the markets have corrected by 15%. My Indiabulls Housing Finance investment has fallen by roughly 50%. Now many of you would say that, you know what, okay, this is like a horrible buy. Why did you even purchase it? And so many things, because it's always easy to go in the hindsight and draw some inferences out of it. But there are a few key points that I would like to tell you here. First and foremost, it might look like that 1.5 lakh rupee is a huge quantum of amount, but given my portfolio size, it is not. It is a small amount from that perspective. Again, I'm not saying this to boast. I'm saying this with the viewpoint that if you check my Indiabulls Housing Finance video, I categorically said that I'm going to invest roughly 10% or my first installment in that stock. I roughly invested 1.5 lakh rupees and unfortunately the market started tanking. So a stock like Indiabulls Housing Finance also started tanking. Important point to notice that, hey, I only had invested 10% of the intended amount that I wanted to invest on a stock like Indiabulls Housing Finance. So how much money am I left with? I'm still left with 90% of the amount that I want to invest. So for example, if tomorrow I decide that, you know what, I have a lot of faith on Indiabulls Housing Finance, I will go and invest almost like 10-11 lakhs. Then how much in percentage terms would be my loss because I'm downward averaging it? It will come down in single digits. So please think a little bit rationally as to how you are building positions. I'm not worried about Indiabulls Housing Finance because I have an opportunity or a massive opportunity from this point to take more positions in it in case I feel like. Now comes the second related point to the stock, that Akshat, then why did you purchase the Indiabulls Housing Finance stock? There were multiple reasons. Again, I will request you that please watch my previous video on this topic. But to tell you a very high level summary here is that first and foremost, that real estate market had started recovering back in September, October when I had shot this video. So Indiabulls Housing Finance, because the nature of the work is related to giving housing finance loans, it will benefit from the real estate growth. And I'm still very much bullish on the real estate growth from this point because it has been a suppressed industry for almost 1.5 decades now. So from that viewpoint, I'm still very much bullish on real estate, and Indiabulls Housing Finance happens to be one of the stocks in which I had invested. Second key point, that if you take a look at the management changes in Indiabulls Housing Finance and study the reason for the fall of Indiabulls Housing Finance, you will realize that Sameer Gehlot sold his equity. There was a lot of panic that, you know what, top management of Indiabulls Housing Finance has sold their equities. So why should small investors invest in it? Okay, so take a look at who purchased that equity. So you can categorically see that Morgan Stanley and Abu Dhabi Investment Authority had purchased that equity from Sameer Gehlot. Now, do you really think that Morgan Stanley will knowingly make a horrible investment because they want to lose their money? The answer is no. This equity holding has gone from one strong hand to another strong hand. There is absolutely zero problem with that. But the hawa in the market was that Sameer Gehlot sold his equity. No, so that is not the right way of analyzing it. So this is the second key point. Now comes the third key point. If you take a look at the 5-year chart of Indiabulls Housing Finance, I hope you are able to see this, that it has been consolidating in this same range for around 5 years. And now it has started to lighten its debt. So therefore, I was hopeful that Indiabulls Housing Finance might become a turnaround story. But unfortunately, the market dynamics haven't played out. Have I lost faith on the stock? The answer is no. Is this an investment advice from my side that go and invest in Indiabulls Housing Finance? The answer is no. You need to do your own due diligence. I'm just giving you an additional data point from my side. I'm not selling my investment. I will probably aggregate more positions going forward in the future. Whenever I'm doing it, I'll make an updated video. But I hope you get the sense as to why I made an investment, why am I not worried about it, and more importantly, how I have been building my position. Now let's move on to stock number 2, which is HDFC AMC. So how much money have I invested on HDFC AMC? It is close to 40 lakhs, right? And I'm sitting on a loss of roughly 14 lakhs with a total fall of 34% on my portfolio. Okay, so this is my worst performing stock from an absolute quantum point of view, or the absolute amount of notional loss that I'm taking. Okay, so if you check the stock from its peak, then it has fallen by roughly 55%, right? So, and I'm sitting on a loss of 34% because I downward averaged it up to a point, but unfortunately the stock kept on falling. Why there is a discrepancy? Because I started downward averaging it. So therefore I was able to somewhat curtail my loss compared to other investors who might have purchased this stock right here, right? So I hope this point is clear. A related point here is that, am I going to build more positions on HDFC AMC? Maybe. I'm not completely maxed out. I might purchase it more. Will I do it right away? The answer is no. I'm going to be a little bit conservative. Now you might say that, okay, have you lost conviction on the stock? The answer is absolutely not. Why is that? So let me explain you the logic also. So first and foremost, we are dealing with finance stocks. Finance stocks usually have a higher beta. So beta simply means that if the market falls by roughly 13-14%, as Nifty, the entire market has fallen by 15%, the finance stocks are going to fall more. Why? Because these are growth oriented stocks. And the opposite also happens, that when the market runs up by 15%, finance stocks might run up by 25% at that point. So finance stocks have a higher beta. And what type of stock is HDFC AMC? It is a finance stock. Now within finance, what type of stock is it? It is an AMC stock. Now AMC have had a really horrible run this year. Why? Think about it, right? A lot of people this year have stopped doing their SIPs. They have lost trust on the stock market because they had like 3% loss on the stock market. They have gone away, all that stuff. So people are not investing with AMC companies anymore. There has been like Access mutual fund scam and whatnot. So honestly, there is a lot of bad air surrounding the AMC industry, that the competition has gone up. Their profit margins have come down. Yes, because since 2020, 2021 onwards, the industry has somewhat shrunk. Why has it shrunk? Not because of some fundamental reasons, just because people stopped doing their SIPs and stopped investing in the stock market aggressively. That was the simple reason. Now, have fundamentals changed? The answer is no. So India still remains one of the most under-penetrated AMC markets in the world. Big investors are coming in. For example, Navi has started in AMC business. They are going to IPO soon. Similarly, you have Zerodha. They are also trying to get into the AMC space. So these people are smart. It's not as if that they want to invest their money, time, effort, building something in a dying industry. So AMC is a very much booming industry. It is just going through a bad phase. So this is part A. Part 2 is AMC business is a brand driven business. Now, what do you think is going to happen after Access mutual fund scam? Any new investor that is coming into the stock market or investing via mutual funds, they are going to think 5 times before putting their money in a brand. And do you seriously think that HDFC brand is a weak brand in India? The answer is no. It is still going to remain the number 1 brand, even if Navi or Zerodha come into the picture. Yes, competition will rise, but this competition is rising in a growing industry. And final statistic here is that in India, 90% of wealth is logged into real estate or gold. That wealth is going to come to the stock market, or at least a significant portion of that wealth is going to come to the stock market. Now, who do you think is going to benefit the most from it? It is the AMC industry, and therefore I'm very much bullish on AMC and HDFC AMC. Is this a recommendation to buy? The answer is no. Please do your due diligence. Now let's move on to the third stock, which is Ujjivan Small Finance. And again, the story is very, very similar. And here is my total loss on Ujjivan Small Finance. And here also the story is exactly similar, right? For example, it's a finance stock. So of course it will fall more. It is in banking. Now banking also moves quite a lot. And let me show you one data point about banking stocks also. So this is Banking Nifty. This is the collection of top banks in India, and they collectively have fallen by 21%. So if Ujjivan Small Finance falls by like 45-50%, you should not lose your peace of mind. Why? Because small finance banks are going to be more volatile compared to other set of banks. That's A. B. If you study Ujjivan Small Finance banks fall, Why did it fall? Because there were management related issues. Could I have predicted it? The answer is no. In banking, I can't predict management frauds. No one can. That is the risk that you are taking by investing in individual stocks. Did I invest all my money in Ujjivan Small Finance? I invested only 25-30% of the amount that I wanted to invest, and I diversified my investment. For example, Equitas Small Finance is one of the banks that I hold, or small finance banks that I hold. I'm still sitting on massive profits on that stock despite all the fall that has happened in the stock market. So the point that I want to outline is that Ujjivan Small Finance type of banks are not bad banks to begin with. There can be issues that can be uncovered which you and I as retail investors would not know. Should you lose faith on Ujjivan Small Finance right now? I would say no. So let's take a look at the last 6-month performance. So in November, it was trading around 17-18 rupees. Right now also it is trading at around 17-18 rupees. Okay, so what does this tell you? That hey, despite the entire markets falling, Nifty falling by 15%, it is still standing its ground. It fell during this range because of management related issues, which you and I could not have predicted. But should we be selling now? The answer is no, we should not be selling now because this management related issue has already been factored in, and after this point the stock has stayed stable, right? So there has been no issues per se. So according to me, I am holding it. Please make your own decision. Now comes the fifth and final stock, which is Hindustan Unilever, one of my favorite stocks. I invested roughly 42 lakhs and I'm sitting on a loss of roughly 7.5%. Now, first and foremost, please remember that Nifty has fallen by 13-14%. HUL in my portfolio, it has fallen by 7.5%. So I am not sad about it at all. So this is the number one point. Number 2 point, as I was speaking earlier when I was explaining you the concepts, that something like HUL will benefit from inflation. It might have another 2-3 quarters of slow growth, but whatever price increases that it has undertaken, that is going to reflect in pure profits after a few quarters. So I am quite confident that HUL will come back up. They have shown that they have the branding power, they have the pricing power. In fact, they have been constantly increasing the prices over the last several months, despite inflation, despite slowdown in sales and whatnot. So I'm quite confident that HUL is already a good stock. A lot of people comment that, hey Akshat, you know what, hum lut gaye, barbad ho gaye. HUL ne hame kahin ka nahi choda. Guys, it's like 7.5% fall in a market where the market itself has fallen by 14%. So how does this become a bad stock, right? So I don't know what to say to this. So the next stock on our list is Amara Raja Batteries. So I made this video quite a while back, right? So I started talking about EV stock. Even I was very bullish about the entire EV industry. Over the course of last 1 year, my narrative or my understanding about the EV industry has changed. So Amara Raja is the only stock where I do not know what to say to you. I'm being very, very upfront and genuine with you because the entire narrative around the EV industry has changed completely. For example, a stock or a top performing stock in the EV sector, which was Tesla, even that has taken a hit. The fundamental issues with EV industry have not been solved yet. Yes, it holds massive promise because it is almost given that almost all the conventional vehicles will move to EVs. No doubt about that. But right now, if you think about it from an India-oriented EV perspective, you will see that even companies like Maruti are on the edge. They are not fully committed to the EV space. There has to be a reason behind it. We have waited for a while now that after Tata Motors announcement that they are going to explore the EV industry quite aggressively, there have been a lot of commentary from people at Maruti that hey, we are getting into this space, we are not getting into this space, we will get into this space when the cost structure get rationalized. So there are a bunch of undiscovered questions in the EV space which still persist. So what are my final thoughts on Amara Raja Batteries? It's very simple that it is one of the leading battery producers in India. So if the EV games pick up, and especially if the battery segment in the EV space becomes rationalized, then Amara Raja will definitely have a space to play. I'm not taking more positions on it. I'm not selling off my positions also because these type of stocks will benefit immensely from any type of R&D or research and development movement that might happen in the EV space. In passing, a final few points that please hold and invest in companies that you have faith on. If you have no faith, then volatility is going to shake you and you are going to jump off the bandwagon and you will never return to the stock market, and all your notional losses. Notional losses means the loss that you're seeing right now in red, they will become permanent losses. Stock market turns very, very quickly. So please don't try to time the market. Please keep on investing. That is my personal advice. And this is exactly what I'm also doing. Third and finally, investing is a very personalized journey. It depends on your risk appetite, your personal situation, how you're looking at the stock market. Are you a long-term player versus not? Can you hold notional loss-making stocks? All these are critical components. If you are investing in the stock market by taking a loan, you will get wiped out. So that is not something that you should be doing. And please be considerate about your own risk appetite and invest accordingly. So I hope you enjoyed the discussion. It was not a very easy to make. I know that I'm going to get trolled quite a lot, so your support will mean a lot. Please press the like button and I will see you tomorrow.